Kate Moore, as I said, it's great to have you with us. Why don't you give us your view? Everybody's spoken now. Where do you think we're heading?
Yeah, look, I think we're headed higher in the second half of the year, for sure. But I think we're going to have some pockets of, rotation. I'm calling them sort of broader air pockets throughout the course of the summer as everyone readjusts their positioning. Scott, one thing I've been really following are the fund flows. Probably everyone knows this, but we are on a record year for flows. In fact, so far into equities in the first half of 2021, we have flows that are double the previous record of all time, which was 2017. If we keep at this, we're going to have $1.2 trillion of net new money going into equities. Again, we could have a little pause in the next couple months as everyone readjusts their positioning away from some of the restart or reflation trade into more of the secular growers. But I feel like we're going to end the year meaningfully higher from here. So I'm bullish.
Okay. Joe Terranova, playing right off of what Kate has to say today. It's interesting. One of the notes that we're focused on, Goldman Sachs is talking about inflows being the strongest in the first half since 2007 and how buybacks are strong as well. I've got Mike Wilson, though, on the flip side in terms of positive view, at least for now. He says a 10 to 20% correction for the broader indices is coming this year. What do you think?
I think you have to absorb the information in both of those notes, respect each of them, and understand that that is clearly defining the environment, Scott, where there is so much uncertainty. I think where there is uniform views is that even if you were to absorb a 10 to 20% correction, you will recover from that and the market will ultimately end back up higher. So I think given everything that we have right now fundamentally in place, that points towards a continuation of the existing bullish trend. 10 to 20%, I'm suspicious of that. I don't know if I see that. I think the bull trend that we have right now is in place. I just expect that it's going to be very slow and move more in line with the turtle pace, not so much running like a rabbit.
Okay, so Steph, do you really think there's that much, I'm going to use Joe's word, uncertainty out there? I almost feel like we have more certainty than we've had in a while, right? The Fed's not tapering tomorrow. It's not raising rates tomorrow. There's still plenty of liquidity, and that's Tom Lee's note. And, oh, by the way, you take a look at where yields are. Forget the idea that yields are going to run away from you either, because they're certainly not acting like they are. An improving earnings picture, an improving reopening picture. Is there more certainty or uncertainty?
I thought last week was a total overreaction. Bullard himself said it's going to take several meetings just to get to the taper talks. Powell couldn't explain the higher dot plots. And so even if they do taper, they're not raising rates till maybe this time next year, maybe even 2023. Now, a lot can happen in this between now and next year. I get that. And they can change their mind. But for now, I don't think anything changed. Again, they're not raising rates. We do not need emergency policy as a result because we are seeing better data, right? We've been talking about data forever. I think the bigger story last week was all about the rotation, Scott, and that's been the 2021 theme. So from January to May, value outperformed growth by 12 percentage points. In June alone, growth has now cut that spread to 5 percentage points. So growth has certainly had a comeback. And the question is, and the reason why we're having all these rotational moves is because it's the debate over peak growth. Are we at peak growth? And you know what? We probably are at peak growth, but that doesn't mean we can't stay above trendline growth. We're going to do 7 to 8% GDP growth this year. We're going to probably do about 5% next year. Strong growth, little inflation, low rates. That's like Goldilocks to me. And again, if you have a good economy, you're going to have good earnings. Earnings could rise this year alone 40%. We know stocks follow profits. So I think we go higher.